Good afternoon, it's Monday the 23rd. My name's Cody Bills, this is Logan Burgess. We saw the grain market move a little bit lower here. Corn was mostly unchanged here, up 3/4 cent. Soybeans down 10 cents, wheat down 4, and Kansas City wheat trading off 9 cents here today. Now it seems as though the overarching story that everyone's talking about is the dryness out of South America. And I'm wondering, why are we seeing relative strength out of corn here compared to soybeans, which sold off 10 cents today?
Yeah, you know, Cody, at the moment it seems like the dryness out of South America is largely a corn story, and that's because where this dryness is centered around. As we talked about a little bit on Friday, the majority of dry weather expected here over the next 6 to 10 days, maybe 2 weeks, is going to be in that northern Argentina production area. And if we take a look here at how much Brazil and Argentina contributes to 2013-14 expected world exports, you can see that Argentina is a much bigger player when it comes to corn leaving South America than they are to soybeans. So when you look at generally good growing conditions in Brazil, where a lot of the beans are going to be coming from, I think that we see the soybean market taking a little bit of a step back here. But corn traders at the moment do seem to be concerned about corn coming out of Argentina here, particularly in that northern growing area.
You know, one of the other things that could have been kind of putting a little bit of pressure on soybeans was there was talk that China could be switching some of its soybean purchases from the U.S. down to South America. Now, it is kind of interesting because there's a juxtaposition there really between, seems like good growing conditions for soybeans in Brazil, and really that's one of the reasons why China is looking to book perhaps some more out of South America than the corn production, which is a little bit further south in Argentina.
Yeah, absolutely. You know, in the last couple of weeks, we've already seen the soybean export pace slow down a little bit, and I think that's a real concern for a lot of traders. We've talked about it quite a bit here on GrainTV. At some point, we are going to see the bottom fall out of the soybean export market, and I think when you hear stories like that, it's a little bit of indication, or it kind of does some work to plant the seeds that that day may be coming. You know, if we take a look here at the daily chart of the January soybean contract, you can see here that we traded toward the high end of the range in today's session, printed a high around 13.45, but we found a lot of selling pressure around that area. I continue to believe that that's a good price to look at pricing some beans here. Anytime you're at the high side of a recent range and you have a large South American crop looming, it seems like there's some downside risk in this bean market right now.
Yeah, that sounds fair enough, Logan. And you know, we also saw a little bit of selling pressure in the wheat market here. Let's take a look at the weekly Chicago wheat chart here, and you'll notice that we did end up trading a little bit lower here. We talked a little bit about this on Friday here. We kind of expected Friday had a little bit of a bounce. That may have been some short covering, but it looks like selling pressure entered the market again here today. Even though we had relatively light volume, we are trading lower here. One thing to keep in mind, though, is when you get down around that $6 mark, and maybe even a little bit below that, we are looking at a trend line, and that could act as support. So especially if we sell off during this lighter trade volume during the holidays, we may be able to find some support if we get down around those levels.
Yeah, you know, Cody, let's take a look here quickly, kind of at an administrative note here, the hours that the CBOT is going to be trading over the Christmas holiday. As you can see, we do have an early close tomorrow on the Chicago Board of Trade at 12 o'clock Central Time. Minneapolis is going to be open 15 minutes later till 12:15. Obviously, the markets are going to be closed Wednesday for Christmas Day, and we'll have a normal morning open at 8:30 Central Time on Thursday. Moving forward from Thursday, we're going to have normal trade hours. So really, early close tomorrow is the thing to take a note of, and then we'll be opening on Thursday at 8:30 Central Time. We'll be in the office here tomorrow and on Thursday and Friday. If you guys have any questions, keep in mind that we got a great mobile trading app now available for iPhone, Android, tablet, or iPad. If you might be getting one of those for Christmas, visit us over at grainhedge.com and take a demo. It's available now. Thanks a lot for joining us on GrainTV. We'll see you tomorrow.